Hello everyone, I'm just preparing to start the stream as I speak. Just trying to get the chat set up. It will be up momentarily. Alright, chat is up. Now I just have to make sure that everything is good and live. Awesome, that should be working. I will paste the link into our Telegram. All right, awesome. Let's get started. So, welcome everyone, and thank you for watching. This is Charlie from Altcoin Mentors, and today I'm going to be talking about the past 2 weeks in crypto, just because I took a break from last week, just because I didn't really have anything new to say. I'll skip my the rant I was going to go on about content creators just saying things to say things, but I do have a lot to talk about today, so I'll skip that. And I'm also going to answer a few of your questions of the people in the chat. Again, I appreciate you for being here. And if you wait until the end, I'll be happy to answer any questions that you have if I don't answer them in the first portion of this. So this is going to last about 1 hour, and I can possibly extend it up to 1.5 hours if there are enough questions. So, sound is very low. I am sorry about that. Let me see what I can do. Switch back to pre-roll. Can someone else please confirm that the audio is very low? Okay, how about that? Is that a little bit better? Okay, the person who said that didn't actually say it was better, but I'm going to assume that it is. I'll try to talk a little bit closer to the mic or just hold it up. It's fine to me? Okay. Strange. So, first I'm going to talk about the long-term view of Bitcoin. I always like to start from this just because it tends to level people's heads. Just because a lot of people are so focused on what is happening at this exact moment that they don't actually take a step back at any time and think about the bigger picture, especially if you are a long-term hodler. Yeah, so this is a 1 week chart, and you can see I've done the labeling, and what I see right now is that we are in the middle of a wave 4 correction. So what that means, so this is not going to be new for a lot of you, but if you're not familiar with Elliott Wave, you have a 3-wave advance, or a 5-wave advance, and then you have a 3-wave correction. So that would be 3 waves down after that, something like that. And right now we are still in the very bullish uptrend, but we are momentarily paused just so that we can get a little bit of a consolidation before we start another huge uptrend. Historically, in other markets, after you have a parabolic advance, which this absolutely was, make no mistake about it, we went from about $200 up to $20,000. A 100x move like that is certainly going to be parabolic, especially when it's in a time frame of 1 year. Historically, when you have parabolic advances that are broken, as it was during the first week or the second week of January, you have an 80% correction. So I think right now we are at 65%. So we are almost there. As you can see, I've marked out this nice green box to show you exactly where I expect, or at least where Bitcoin should go eventually, and that is between $4,700 and $3,000. And this is exactly in line with what I just said, where a parabolic advance is followed by a correction of 80%. So 80% of 20,000, that would be 16,000, and that would put it about 4,000. So exactly right smack in the middle of that. And then the fun really starts after that, when we get to see exactly how far extended this fifth wave in Bitcoin will be. Because historically, also, the fifth waves have been pretty ridiculous. And you can see that I have drawn this red box. And we have the 1.68 extension. And then finally for the numbers, the bottom of the box is at 48,000. The top of the box is at 200,000. And I expect it to be, or at least if you go from an earlier projection, it points to right around the top end of that range to 150,000. So I hope this has put the current action in Bitcoin into a little bit of a more long-term perspective. Too many people are just, oh, what's the current price right now, this second, and then they watch the chart like they're watching Netflix. But doesn't actually help you. You're just going to end up over trading and losing money. So don't do that. Now I'm going to move on to where Bitcoin is at this moment. So this is a more complicated chart than the other one, obviously, but it has to be, because wave 4s are known for being extremely difficult to predict, difficult to trade, and very complex. So besides the 3 waves and 5 waves, you can also have variations of those, especially in corrections. A 5-wave move is always going to be an impulse, and an impulse is always going to be 5 waves, but a correction can also be sometimes up to 9 waves, and in various forms of that. And living up to its name, Bitcoin is Bitcoin is always known to be very complex to begin with. So combine a Bitcoin move with a correction, and you get something that is very hard to analyze. So we had a corrective move up from the February 5 lows from around 6,000, and this is when a lot of people thought that we were back. The bull market was back, but altcoins continued to bleed as this move happened, and they continued to bleed even more, getting to around this area. Someone in the chat just said that was a double top, so the reverse will be 6K. That is what a lot of people think. I personally am not convinced that this was that these two here were a true double top, just because there wasn't enough time and action in between. To see a true double top, you would want to have some more action and especially some more time. Get this book. A lot of people are traders who just learned from the internet and started applying it immediately, but you really have to go back to original sources. So this is one of the first TA books ever published, Richard Schaubacher's Technical Analysis and Stock Market Profits. This was published in the 1930s, I think. 1937. And it is extremely valuable to go back and read it just to see exactly what they were working with then. It's especially interesting because the very first section is about how to draw your charts correctly. We really take for granted that we are not hand drawing our charts, and we have this amazing software, TradingView, available to us. So long story short, I wouldn't exactly call this a double top. But getting back to what I was saying before, there are 4 different possibilities in Bitcoin. You might have seen a chart that I had put out on Twitter and also in our Telegram channel, saying explaining some of these 4 possibilities, and I'm going to go through them right now. So the first possibility is that we actually that's the least likely, so I won't start with that. My primary for a long time was that this was the bottom. This is when I sent out a tweet that said we're capitulating right now. Certainly a lot of the alts had capitulation moments where you saw ridiculous downtrends very, very quickly. And that was a very good sign that the correction was over. But unfortunately, like I said before, Bitcoin is very difficult, especially in wave fours. And this was not the end of the correction. We had yet another leg down. So it went from just being a WXY to a WXYXZ. And this path that I had laid out before, where you had this whole move down being 1A, then you would have another B wave up, and then you would have final C into the green box that I talked about before. And this was my primary for a very, very long time, and it's still valid, barely. You can see that we are still technically above the February 5 lows, but not by much. So I do expect this to break at some point. But if it doesn't, and it manages to rally up to between, let me get the exact Fibonacci's, levels up, wrong one. If we are able to rally from between 10,900 to 16,800, then that will be a very, very tough bull trap for people, because they really want to believe that this is going to be extremely bullish all the time and that this was just one correction. And that's true. But then there's going to be, in this scenario at least, a massive wave down where people truly capitulate, and then we get into the 4,000s. So that will be fun if you're a trader, not fun if you're a hodler. And then the second scenario is this red one. So you can see that instead of the top being around this area, the top was actually much more abbreviated, and that this was the actual top. This top on February 20th at around $12,000. And this started the 5 waves down into this green box. So you have wave 1 here, wave 2, and then this was all wave 3. And wave 3 is potentially not even over. And then you have a wave 4, which is going to be up to here. And then a final 5 down to 4,700 or lower. Remember, Bitcoin is known for extended fifths, and that matches up because this fifth could also be placed anywhere in this box here, if this count is the one that ends up being correct. So let's talk about what I expect to see if this is the case. I expect this to bounce no higher than 9,300. So if we get above 9,300, that's when I really start to switch back to this alternate count where we go up to the 13,000s and then down to 4,000 instead of going down to 4,000 straight away. And the level that will really tell us this, like I said before, 9,300, but more likely it will not go above 8,700. And you can see that this is supported also by the volume profile. So I want to give a shout out to both my dad and to Crypto Rampage on Twitter. They have both been spouting the effectiveness of this volume indicator, having it on the vertical axis instead of the horizontal axis, and it actually has been much more interesting. I didn't get much use out of traditional volume on the bottom, but this is very useful. So you can see that this red box between 8,700 and 8,000 pretty much lines up with the expected ranges of support and resistance from your VPVR indicator. So you have that top spike around 8,900, and then that bottom one right around 7,900. Then you have a real big one at around 8,500. So my guess is, as this is my primary scenario, that we get a bounce up from here to 8,500, dink right off of that support, and then come back down into this green box right away. So this is the scenario that I'm primarily positioning myself towards because it is the most immediately bearish. And that means that I had told you, a lot of people before, that at this point when I said it was capitulation, I put all my cash in, and I did. And then I took 50% out during this period here because it really wasn't looking good. It really puttered out and didn't look like a strong impulse to me. And then I took the final remaining out right before this triangle broke out and we headed down. And then started to reposition myself last night. So hopefully we will get a nice bounce up to here, but I'll certainly start taking profits as soon as we get into anywhere around here because I really don't want to be on the wrong end of this short, or of this down move here. I really want to be net short. So that is the second scenario and perhaps the most likely. Now there's two scenarios that call for us not in fact going back down into this area at all. And so while that might not be as academic in terms of Elliott wave theory as the other ones, Bitcoin certainly doesn't like to be a good case study for the academic Elliottians. So that the first scenario is that we have this diagonal in white here. So you see that this, and that means that we had bottomed at 5,900 in February 5th, and that now we're just playing out these three waves up, three down, and then we're going to squiggle up to here, up to around the same area as the B wave would. So between, where are those fibs? Between 16,000 and 11,000 essentially. And then, excuse me, come back down here, back down, back up there, and then back down, and then we start the real uptrend. So quite frustrating. It extends on this chart, I don't know, probably around June, but I don't really have a great edge on timeframes. And then finally we get to this triangle. So if this is a big triangle, so say that this, pretend this was purple, and you had this purple up here, so we would go from our 20,000 top to our 6,000 bottom, then we'd go back up to around 15,000, get rejected, go back down to 17,000, go back up to 13,000, down again to 8,000, and then we go back up. So this is the most bullish of them all because it just continues to make higher lows from here. And I would love this for this to play out because we would get some really nice trades available from in between this region. So those are the possibilities that I see in Bitcoin. And like I said before, the most likely ones are going to be the most likely ones, if you look at the Bitcoin chart only, shall I say, are the first two, where it goes into this green box eventually. Whether it takes a pit stop first into the mid-teens before it does that is the difference between the two. Now, the problem comes when you look at a lot of the other alts where they have hit critical supports and some have even retraced, say, 90%. And this is something of a conundrum where Bitcoin's chart really looks bearish, really looks like it needs to go down to 3,000 again, or into the 4,000 to 3,000 range again. But alts really look like they wouldn't be able to handle that. And so for that reason, that's the only reason why I'm not completely dismissing the last two counts of the leading diagonal and the triangle, just because the alts really don't look like they could handle making a lower low. Okay, so Zazazgogi says, what about Death Cross? What about it? I don't really care about it. I don't really use EMAs in my trading anyway. It's such a lagging indicator. You could even use it as a contrarian indicator, honestly, on a larger time frame. So he's talking about the Death Cross on the daily time frame. So that's the 200 and the 50 EMAs. It's such a lagging indicator. I mean, if you waited until, if you're going to sell now that you have the Death Cross, good luck with that. We're closer to the bottom than we are to the top. The next time that we're going to get a golden cross, the next time we get a golden cross is when Bitcoin is already making a new all-time high, and that's when you're going to buy. No, that's not how you want to be trading. So I don't pay much attention to moving average crosses over each other. I really only pay attention to using them as support and resistance. All right, so let us take a look at this new contract that BitMEX is providing. So if you're not familiar with BitMEX, BitMEX does contracts only. So a contract is in contrast to spot Bitcoin or spot Ethereum or spot Cardano, where you actually own, instead of owning that coin on BitMEX, you can just trade contracts that are tied to that coin, essentially. So the most commonly traded BitMEX contract is your inverse perpetual swap for Bitcoin. So this is the XBT USD. And people like this a lot because you can use up to 200 times leverage, which I don't suggest you do because you'll get liquidated if it moves against you 0.5%. But people really like it because you don't have to deal with because it has the highest volume by far and it has a lot of leverage. And so that's the perpetual contract, and it's basically tied to the spot value, so actual Bitcoin. And they also have futures. So futures contract is you are agreeing to buy or sell something at a predetermined price at a specified time in the future. So doesn't actually say it here. Let's just go to the futures contract. So this is the April contract, I think, or April 30th contract. Oh no, this is the June 29th contract. So this is a contract that expires at the end of June. So that means that it is going to be slightly different from the perpetual swap, which is tied to the spot. And as you can see, it is almost $100 lower than the spot, which means that people are expecting the price in June to be lower than the price right now. So I personally might actually, now that I'm seeing this, actually might take a trade where you would go long on the futures contract and then go short on the perpetual swap or on spot Bitcoin, because this will, once we become bearish again, this will quickly catch up, and it's a pretty safe trade, not much volatility, if you believe that the next few months are going to be bullish. So September even better, it's even lower. So people think that in the end of September, we're going to be even lower than we are now. And that's as good as a risk-free return as you're going to get. Actually, that looks like a pretty good trade to me, now that I'm looking at it. Anyway, that wasn't the main point of the main thing I wanted to talk about. I wanted to talk about the fact that more complex derivatives are going to come into the crypto market. If you look at the traditional financial markets, you have all sorts of ridiculous things that you can trade on. You can bet on the weather. You have weather options. So if you are a crop company, you want to hedge against the weather, or a farming company, let's say, if the weather's bad, you make less money. So you can say that you're going to actually bet on the weather to be bad, so that it's just a hedge against the profit that is going to be reduced if you don't do it. You can bet against, or you can bet for or against contracts on pork belly. You can bet on contracts against whatever. And obviously in crypto, we don't really have a lot of these. You don't have options. We barely have futures. We have BitMEX futures, and we have futures on the CME and CBOE, but they have almost no margin, and there's no volume in them. But options are really the big one, where there's so many different strategies that you can take advantage of if you're really good trading options when you have them. And I'm really excited for these upside profit contracts on BitMEX, because even though they're quite limited, you can only be net long. You are still only, it's basically a long only call option. And while it's not a full, you don't have the associated puts as well, it's definitely a start. You need both sides, puts and calls, to be able to execute a lot of the strategies that you want to, say like volatility hedges and stuff like that. but this is certainly a start. And I'm really excited that we're going to be able to get some of these more complex financial derivatives into crypto, because it's really going to open up the space to bigger players who will certainly know how to trade them. So one of the biggest good things about Bitcoin trading is that it's super volatile. It can move 10% in a day without blinking. And without options, you can't actually bet on that volatility. So say you could have an option that would expire out of the money, say 20% out of the money on both sides. You have long puts and calls. So if Bitcoin moves 20% by the time that your options expire, then you have just made a very large amount of money depending on what the margin was. And there are all sorts of ways that you can use different schemes of long, short puts and calls along with the associated spot. And if you add futures in, that makes it even more complicated and potentially even more lucrative. So like I said, I'm very excited that we're going to be able to do these things. And it's going to be especially interesting because the Bitcoin volatility adds some interesting mathematical modeling challenges. You can't assume you'll have to use you might have to use a different distribution for your Black-Scholes model. Or actually, I don't even know if you can change that assumption in the Black-Scholes model. That's not normal. Anyway, that is something I'll have to ask one of my more mathematically inclined friends. And then finally, this is going to conclude, this section right now is going to conclude the end of my talking period and the beginning of my question and answer period. So let me just pull up this last tweet I wanted to share. So for those who don't know, Peter Brandt has been a trader for, I think, 40 years. He started out, he was the one who actually recommended the book, the Schabacher book. And he has been a classical chartist for a very, very long time, and a very profitable one at that. And he had a very interesting tweet the other day where he was saying that you don't need to have trade identification as your main strategy. In fact, you definitely should not. Trade identification is sexy, and it's really fun to call bottoms and call tops and say buy and sell, but that's not what makes the money. What makes the money is risk management. How much do you put in to start? How do you manage your trade once you're in? What do you do with your losers? How do you manage your emotions during the trade to make sure you don't work against yourself? How do you make sure that you don't fuck up a trade in process, something that's a clear winner, but you're just too impatient to let it play out? And in fact, he says that trade identification is only 10% of that, while 40% is your risk and trade management. So if I pull up I shouldn't have closed that Bitcoin chart, but I'll give you an example. I was very, very bullish after this capitulation. I really believed that we were going to that we hit up here, that was very bullish. We had a pit stop here, that was also very bullish. Went up, I thought this was just going to be a B wave. And then we came down, and we came down here. And this is when I started getting a little bit worried because it didn't look correct. But I was still quite bullish. And I know a lot of other people who would have just taken all of the money that they had and put it in, 100% of their trading account, into Bitcoin right now. Possibly even leverage up. And then it would just kept going down. And they would have, instead of cutting their losses short, they would have just maybe even averaged down and doubled up their position. And then this triangle would break down. And then this is when they really fucked up and they got liquidated. And now they got bottom ticked and they don't have any capital to play the bounce up that we're probably going to see. So even if this was the bottom, which it was a local bottom, it's not good enough to be able to call that. You have to know how to cut your losses short and then let your winners keep going. If you had bought Bitcoin here at $3,000, but then you sold it after it retraced in November at $6,000. You got it right. I mean, you got the trade right, but you fucked up the risk management. So your trade identification is certainly not everything. You have to know how to stay on the sidelines when things are going good and be able to take the emotional hit when the trade goes against you. You just have to cut it. You can't have any emotion about it. You can see that he separates out managing emotions and discipline and pulling trigger out into their own categories, and those are 10% each, or even 20 and 30%, 20 and 10%, 30% total. If you add that, that's almost 70% of everything is just managing emotions, discipline, and risk management. So I thought that was super interesting, and it's always a good reminder that, like I said before, identifying tops and bottoms and good trade setups is sexy and gets you Twitter followers, but what makes you actual money is discipline, risk management, having rules and not breaking them, managing your emotions. That's what makes you the real money. So, just to drive the point a little bit more, I'll tell you about how I am going to do this right now. So, like I said before, I am net long, barely. I still have a lot of cash on the sidelines, and I am playing the bounce up to here, at which point I will go net short. But there will be a tight stop loss up to here, because once it gets to above this level, I'm no longer sure that I'm right. And I'm going to have a tight stop loss because I can always get in later if the trade continues to go my way. And once I am actually in the short, I don't go all out balls out once the short starts. I don't try to get the absolute best price no matter what. I don't really care about the head. I want to get the shoulders. I want to trade that inside range. And then have a heavy position there, and then have my heaviest position at the middle, and then start lightening it up as it goes more and more towards what I want. What I don't want is for the trade to go against me, I double down, and then it hits my stop loss, but I move it down, and then it keeps losing me money. And even then, I just keep adding more because I think I'm still right, even though the trade has clearly gone the wrong way. And because even though I'm completely wrong, I'm only looking for the signs that I'm right and ignoring everything else. So, if you can't tell, these are very painfully learned lessons from lots of trading, not only in Bitcoin, but in other financial instruments as well. And I don't think that you can learn these lessons without going through quite a bit of pain. So I applaud everyone who has gone through those things before. And I hope that everyone listening, I hope you are able to do it and be the rare person who doesn't have to go through these painful lessons in order to have good risk management. So I highly suggest you read up on it. I will do a video eventually on good risk management. But I guess the basic tenets are cut your losers early, let your winners run, always have a plan, know when your target is, know when your stop loss is, and know the criteria under which you're going to follow them and not follow them. Never have your biggest position be at the start. And do not average down. Once you're in a trade, make sure that you view everything through the lens that you are in a trade. Know that you're in a trade. A lot of people their mind will work against them. Even when if they're in a trade, their mind will only filter for the information that they want, that they're right. And you can't let that happen. You have to always be on guard against that. And let's see, any other rules for risk management? I'll do a video on it eventually, maybe a tweet storm before that. So yeah. Now let's go into the question and answer section. So I have a few questions from Twitter that I'll say if no one else in the chat has any. So please put your questions there in the chat, or send them to me on Twitter. In the interim, please, if you like this content, please follow me on Twitter. My handle is at IamCharlieU. And our Telegram is, is altcoinmentors.com/Telegram. And in there, altcoinmentors.com/Telegram and twitter.com/IamCharlieU. Blow that up. So on Twitter, I post a lot of stuff on. I'm going to be starting to post a lot more charts with with text on it, just because I think that's quite a good medium for people to learn exactly what I'm seeing. And in our Telegram, we post a lot of trade ideas. We post what our thoughts on the market at any point in time. And we also have this is new. We have a model portfolio, which I just started doing recently. So you can find that at altcoinmentors.com/portfolio. So these are trades that I'm taking that I think are going to be profitable. And we started this on March 17. So right on this day right here. And the market has dumped around 25% since then. And we are unfortunately not profitable yet. We are down 0.8%, which is not bad considering how the market dumped 25%. So I will revisit these in a later date, or I'll visit these once I'm done taking questions. So if you have any questions, please put them in the chat. So the first question I got on Twitter, apparently I'd answered it. Cool. So let's take the chat. Cardano. I'll take a look. So fundamentally, I don't like Cardano much yet. I'm still leaving it I'm open to be surprised later. So Cardano has a bit too long of a timeline personally for me. I think that Charles Hoskinson is a genius. I certainly do recognize that, but they don't plan on having an actual smart contract platform until, when was it? I think they're not going to have a smart contract platform until late 2019. So if their whole goal is to be a Ethereum killer, I think Ethereum's going to be pretty far ahead by the time that they even have smart contracts. So not too sure about that. Yep, just getting these set up. Okay, so Cardano. This is really, really wrecked. Holy Jesus. So this looks like a pretty clear 5 up to me. Oops, that's not where that's supposed to be. But it's possible that this is it's possible this is just 3, because you have a lower low here, but obviously it hadn't, they did have an ICO, so it's possible that it has more history back down here. So this is either 5 or 3, and it retraced. Let's just do a Fibonacci on this bad boy. 1.39 was the bottom. Bottom was 0.078. So violated that last Fibonacci I would want. So that's a 764. Yeah, this is really wrecked. So just by it being a more speculative coin, I don't really like to invest in those right now, just because the more speculation that there is, or the more speculative value there is instead of utility value, then the later it's going to run. So this Cardano is something that I could see pulling a ripple. So pulling a ripple means that you have a giant spike up here, nothing, 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 and then another giant spike once alt season comes. Let me pull up the Ripple chart. Bang, bang. Let's go to daily. Yeah, this is pretty, like... Okay, this is my dad's chart. I don't actually want to... I'll just make a new one. New chart. XRP BTC. Okay, I need a longer term view. I think Polo has the longest. Yeah, there we go. This is called pulling a ripple, where you have just nothing for a very long time. Or actually, you have not much, and then bang, all the way up there, all the way down. Bang, all the way up there, all the way down. And I have no doubt that this is going to happen again. This is going to bleed out all the way down. And then bang, it's going to be just massive on the next alt run again. So that's called pulling a ripple. And Cardano is going to pull a ripple. But it's going to go lower first. So I don't like it now. Tron. Yes, Tron is also going to pull a ripple. So I don't think you should do it now. So what's going to happen is that Bitcoin is going to go on a massive bull run eventually. Whether or not it hits 4K is the big question. So let's say that Bitcoin goes straight up to here from 60 to 60K. So it hits 60K, and what's going to happen is it's going to be choppy for a bit, and that's when alts are really going to run. If you look at the Bitcoin chart and you overlay an altcoin chart, say like Ripple, you'll see that after Bitcoin hit 20,000, that's not when the alts had their best time. The alts had their best time in the chop after that, in the 3 weeks afterwards. Any words on the BitMEX contracts update? Yes, I had a whole section on the BitMEX contracts update. You can see that in the replay. So if you scroll back on YouTube, maybe 20 minutes from here, I talked about it. So, yeah, Cardano, Tron, Ripple, Verge, Nano, anything else that is, I guess Nano's not. I'll take out Nano from that since it has utility. But anything that is purely speculative is not going to have its moment until Bitcoin takes a rest. All right, what indicators do I use? So I have tried to keep the indicators that I use to a minimum as much as possible. And the reason for that, hold on, I need to close my door since there's some construction. Okay, so I don't recommend that you start out with a lot of indicators just because it's harder. You're going to get a lot of false signals from them if you don't know how to use them. What I recommend is that you start with price action only. You learn to draw support and resistance lines first. You start with that. So if you follow us on YouTube, altcoinmentors.com/YouTube or youtube.com/altcoinmentors, you'll see that my dad does a lot of technical analysis, and he doesn't use any indicators. He only uses a few exponential moving averages and then price action and volume. And that's because you don't really need the indicators. They're just there to help you. They're just to have a little different view on the price action itself. So, but saying that, the major indicators that I use are going to be logarithmic Fibonacci's. So that is these right here. So the Fibonacci ratio is a ratio that occurs very often in nature, 0.618. And the markets tend to respect those ratios for whatever reason. And because we are in crypto, you have to use log, and the Fibonacci ratio tool in TradingView is broken for log, so you have to use a custom indicator for that. And it's very good. And like I was saying before, VPVR is very useful. Not so much on Cardano. I guess kind of. But VPVR is a very good way to supplement drawing support and resistance. Oh, you know who else has a really good video on it? Crypto Cred. I respect this guy a lot. Crypto Cred has a very good. Okay, I can't find it, but if you look him up on Twitter, he has a very good video on how to draw support and resistance lines. So I would start there. But once you get more complicated, once you have the urge to add some more indicators, these are the ones that I use for divergences. So RSI, MACD, on balance volume oscillator, and then Hurst cycle channel oscillator. But I don't put much. I barely look at these, really. They're only there if I need a second look. I can't tell what's going on just from the price action itself. I guess the really big supplemental ones that I recommend are using Fibonacci ratios and the VPVR. And EMAs if you so choose. I only use patterns as strategy. Actually, I barely use any patterns now. I mainly trade off of Elliott waves. So I guess technically those are patterns, but it's not like triangles and bear flags, bull flags, head and shoulders, that kind of stuff. I know how to use those things, but I just choose not to. I think that they're more meant for... I think they're harder to trade on, personally. Let me delete the charts that I made since I don't need them. Head and shoulders on the 5-minute BTC. So that's going to be the last question that's on the queue right now. So guys, please, any questions at all, if you have anything, please put them in the chat. Ooh, Bitcoin had a nice run right there. Head and shoulders, 5-minute. What? I have no idea where you're seeing a head and shoulders. This? I guess this is the neckline, but I wouldn't call this a head and shoulders. It's not now. Or inverse head and shoulders? Or this? No, not really. So the thing is that head and shoulders are, you're really looking at them as reversal patterns. I guess this is a good example. This is a real head and shoulders right there. This is definitely head and shoulders. Look at that. That's beautiful. That's a beautiful pattern. Look at that. You have a big uptrend up. Bang, bang. Hits that, makes that neckline, goes up, touches the neckline again, up, touches it, gets rejected the first time, and then goes up and then breaks significantly downwards. That's almost a perfect target for your head and shoulders there. Equal down. Man, that's very nice. Bat pattern. Yeah, I've never studied those at all, so can't give you anything on that. Wow, that's nice. All right, 1800. Oh, this? I mean, never broke the neckline, so it's not head and shoulders. Everything is, like, there's a lot of things that are potential patterns, but you can't actually call them a pattern until that pattern has materialized. So, I mean, I guess, yeah, you could, this was almost a head and shoulders, but it got rejected off of the neckline. It didn't actually break through it. If it had broken through it, then yeah. And also with patterns you actually need to use the regular volume indicator. Let's turn off VPVR. So, yeah, I'm not really seeing, I wouldn't say this is a head and shoulders based off the volume, or at least it's not a high probability setup. Well, you want to see that head and shoulders setup in the volume as well. So you would want to see that kind of curve, but you didn't get that, so I wouldn't. No, that's not a Head and Shoulders. Let's see. Did the previous one? Okay, I guess the previous one didn't have it either. Bitcoin volume is hard just because of all the different exchanges. So it's hard to gauge. But yeah, it's not. It didn't break the neckline, so you can't call it that. It start from the IRS. What? Is that a question? If it is, please enlighten me. Wow, this is quite the pump, huh? I like it. Wow, that only retraced to the... See, look at that, guys. Bang, bang. Look how perfect that hit is of the 618. See, a lot of people... I personally wasn't a believer in Fibonacci's until I actually tried using them, and then I very quickly became them. It starts from the IRS right shoulder. I have no idea what you're talking about. Sorry, man. So let's see what... So wish there was an HD option. Is there not an HD option on Periscope? That's strange. I'm sorry about that. I'll have to look into that. Maybe there's some setting that I missed. It's HD on YouTube. So yeah, if there's no more questions, I think I'll wrap it up. That's right about 1 hour. Yeah, sorry, Zaz. I have no idea what a bat pattern is. I've never studied that at all. I know that you can draw it here somewhere, I guess, but I've never used it. So but this pump is very nice. Let me see. Let me just get a extension on this bad boy. So 644.5, 69.80, and then the low 67.53. Where's that project to? Oh, I like that. See, that looks nice. So what I'm seeing is that it's expecting that these 5 waves end right here at 8,000. And like I had said before, you also have confluence with this 618 of the entire move at 8,000, and you also have a nice support, and you have a nice resistance level between 7,800 and 8,200. So yeah, this looks like a good start to the move. It looks like it'll probably hit around 7,100, so imminently, and then go back down below 7,000 before continuing up for its real move. If you are a very nimble trader, then this could be a nice move to catch on the retrace. Yeah, sorry, dude, I don't know anything about bat patterns. All the animal patterns, the creature patterns seem a bit... I'm not going to dismiss them since, but not my thing. So, let's see, someone messaged me. Is this another question? No, that's unrelated. Well, awesome. Thank you, guys. Thank you for the questions. Bitcoin looks very good right now. Very good to make it up to 8,000 so that I can throw on a very large short. So that will be pretty tasty. Thank you for watching. I truly, truly appreciate that my opinion is valued and that I can possibly help you navigate this complex world of cryptocurrency trading. And if you want to check out more of our stuff, please go to altcoinmentors.com/telegram. Go to our YouTube channel, altcoinmentors.com/YouTube. And also follow me on Twitter. I am Charlie Yu. So, seeing if there's anything else that I need to mention. I don't. Thank you. Thank you for watching. Make sure to sign up for the model portfolio because I'm sure I will be posting my short there. So that is going to be altcoinmentors.com/portfolio. The opt-in page for that is a little bit outdated, but it's good stuff nonetheless. Thank you for watching, and I hope that I will see you next week because I do this every week. Thank you very much, guys.